All right, we'll start shortly. Hey, welcome to Traders Talk. And this is Ming Hon, your host. And today we'll cover what your fund manager is not telling you. So it's another interesting topic on Traders Talk. Before we start, please like and share so that more people will be able to actually see this. All right, thank you for attending, and we're going to start. Okay, this is a show. I've been hosting this, I think, for more than 3 months. And it has been great journey for me. And I have actually covered a lot of topics and a lot of interesting topics that will benefit you guys, whether it's in terms of personal development, trading training, or financial literacy. Yeah, and today I will cover a bit more on something on financial literacy so that you guys are aware what's actually happening in the market, and how you can actually improve the way you actually generate wealth or save the money. Yeah. Okay. As usual, I will cover a bit more on the stock market first, stock market updates, before we actually go to our main topic today, yeah, which is going to save you millions of dollars, hopefully, in the next years. Yeah. Okay, let me share this screen. I hope everybody is well, and today is actually a public holiday in Malaysia, and I hope you have a great day with your family, resting, or I think a lot of people are actually going out vacations. Okay, all right. So this is actually the S&P 500. This was actually captured today, and if you actually look at S&P 500, right? In the past week, it has actually been going up a lot. You can see that it has actually gone up from a level about 4,300 points, right? Somewhere below here, which is actually at the 100 EMA. It actually shot all the way up above the 50 EMA. Yeah. Before that, for the past month, it has actually been trading sideways. And up till yesterday, if you actually look at it, right, it has actually breached the previous high. Somewhere, this is actually somewhere mid of September, and it closed with a very bullish candle. And if you look at the futures today, let's look at the futures. How is it doing? Earlier, I was actually seeing that it was up. Yeah, it's up 25 points. It's up 25 points. Yesterday, it was the S&P was up 15 points. I thought it went up more than that. 15 points. And today, futures is up 25 points till now. And Dow is up close to 200 points, and Nasdaq another 600 points up. Yeah, so we are actually seeing very good signs here that the market wants to actually go higher. And of course, the next threshold for S&P would actually be at this level here, which is at 4546, which was the all-time high, which was happened somewhere in 1st of September. Yeah, 1st of September. So after about 1 month going down, S&P is a bit tired, and now you actually want to go higher. Yeah, and hopefully it goes higher so that those stocks which has been pushed down is going to recover. Yeah. And what about NDX, right? Okay, NDX is also the same as S&P as usual. The trend is more or less the same, going down, and then now it's actually going up. Last Friday it closed with a bullish bar, and yesterday it continued to actually went up with a very strong indication here, about 150 points up. Today pre-market is already up another 60 to 70 points. Yeah. So stocks like Facebook was also up, going back up yesterday quite strongly. Yeah, you can see Facebook was up quite strongly. It actually dropped all the way down by about 16%, and it bounced off the 200 EMA, and it has actually been going up right now. Yeah. But news-wise, of course, Facebook has been shot down by a lot of bad news here. So that's why it's now probably a good opportunity to actually ride it up with the market, which turned very bullish. On the China side, right? Of course, this is actually the Hang Seng Index. Again, the index actually had achieved another milestone, right? Because it has actually gone down by quite a lot here, and it was hovering around here for quite a while. And I think if you look since last week also, it has actually shot up here. This was Friday, bullish indication. This is actually today. Today it actually closed about another 1% up. Yeah. So this actually brings a lot of other stocks. China stocks, Hong Kong stocks are all having a turnaround, I would say. We have also started to put in a bit more position back on to the China stocks, not in particular any single stocks lah. Yeah. We are actually looking at this ETF called KWEB. Yeah. So KWEB is actually the China Tech ETF, which mainly comprise stocks like Baba, Tencent, Meituan, JD.com, what else? Pinduoduo, Bilibili. All the tech stocks which has actually gone down by more than 40 to 50%. Yeah. So that's why you see KWEB holding all these US ADR, right? It has also gone down by about 55%. Yeah. So you can see that it was actually trading sideways here between 43 to about 53 here. Yeah. Yeah. And now it's actually hovering for the past few days between 49 plus to 51. So since last week, we have been putting in some just some naked puts in this position, and the returns are actually quite good close to ATM strikes you can actually get premiums of about 2% a week. I'm saying a week. So yesterday we have also put in some positions on this ourselves. This is not a recommendation, but this is something which we are actually doing. And for 4 days, that means from yesterday till Friday, maturity put strike 50 at about 50. The premium was close to 2%. Yeah, so close to 2% premium a week is not too bad. Yeah, I mean, on a long-term basis, even if we actually take on this stock, right? This stock at this price level, which is 50% down. I also don't mind to buy this as an investment. Yeah. Even if it continued to actually go down, right? The lowest it had went was actually about 42. And now with the things hopefully going up, continue to go up on the China side, this would actually be a recovery up. Yeah, it might take a bit time, but of course, it's not a problem if you if the stocks which this ETF actually hold are actually strong stocks like Baba, Tencent, and then Meituan is okay. I mean, the only risk is again regulatory risk on China's side, and also because it's holding ADR, right? I mean, there's always been this talk that the US government would actually want to delist all the China stocks. So that is always something which people have been talking about. I think more than a year already. I personally think it won't happen anytime soon. Yeah. Okay, so those are actually the market updates. Yeah. So everything is green. I hope it will continue till end of the week. If you have any positions which was taken down in the past, hopefully it can actually recover. Like the same for us. I mean, we had some positions which we are holding, which actually went down quite a lot, especially on the China side. Till now, of course, most of it are actually recovering above the level where we actually got them. Yeah. Stocks like Baidu actually went up quite strongly in the past week. Yeah, in the past week, we had some positions which, you see, Baidu actually went down all the way to 135. Yeah, so we were holding some positions on Baidu all the way down. I think we took on some positions somewhere here, all the way down to 135. And today yesterday it was actually at 170. The position which we had was a option with a strike of 170. So we were holding an option with a strike of 170, which is now at the money, and it dropped down to 135. And of course, you are actually wondering, right? How could we actually hold a position at when it went down all the way to 135, and our strike was actually 170, and yet we did not make a loss on it. And of course, the reason is, of course, the positions which we are actually holding are naked puts. Means that if you hold a naked put, right? Naked put means you sell a put lah. Yeah, you sell a put. If you hold a naked put, even if you are in the money, it is always possible for you to actually repair the trade and extend the duration of this trade without losing money. Of course, in the P&L, you would actually show that you are in a loss, but you can continue to generate premiums. Out of it by rolling it in time. Because when you roll in time, the market will pay you for it. And if you roll at a credit, you would not lose. You would not add to your risk. It will actually reduce your max loss. And we just had to actually continue to actually roll the trade. We were rolling every two weeks or 3 weeks, and sometimes even up to 1 month, depending if the position could allow us to actually get a credit. Yeah, so that's something great about naked options. And if you actually know how to manage it, actually naked option is the least risky type of option structure, because you can always repair it. And of course, the other thing is you only trade on these naked positions on stocks which you have belief in, stocks which you think that even if it actually go down, right, it can actually recover. Yeah. But of course, for us, we didn't go in just a pure naked position lah. It was some form of spread. And of course, when the stock actually went down, right, we took off the debit side. That means we took off the other leg of the spread. That means we had a sell put and we had actually a buy put. When the price went down, we uplifted the put to actually take profit. Of course, you need to know how to do it, and you have to have the conviction that at the end of the day, the price would actually go up. Otherwise, you will lose more. Yeah. So of course, that let us make profit when the price was actually going down, and when we uplifted the position here, that debit put took out one bunch of profits. And of course, when the price now actually recovers, we took another round of profits. Of course, I think in between here, when we were actually rolling it, right, when the trade actually went to more than delta 90 lah, there is always chance that the stocks is going to be assigned to you. The stocks, the because it is actually in the money, right? So I think we will assign the shares somewhere here lah. Yeah, so we were actually carrying the shares after few rounds of rolling it, and of course now it went back to the price which we will assign the shares. So that's a bit of some options, strategies, and some of the things which we are actually doing. Okay, you would also have guessed why am I actually dressed so smart today? There is a reason, because it actually relates to the topic. Remember last week when we met, we were actually talking about this Squid Game, and I had to actually wear what is that? A t-shirt, and just to make the look like playing Squid Game. So today is the same. I also dress up a bit lah. Let me just stop this. Okay, and I put back the thing which I actually want to talk today. Yeah. So this is a topic. If you have friends who actually want to know what the fund manager is not telling you, the fund managers are like your banker or the people who advise you to invest or to buy some funds and all this lah. Yeah. Okay. So this is like okay, this is a secret just between us today. Okay. This I covered this already. All right. Okay, here. Okay, fund manager, private banking, financial planner, certified. Okay, how often do you guys come across private bankers, financial planners who actually approach you to actually ask you to actually buy their products? Yeah? Anyone? Thumbs up if you have. Give me a love if you have not come across anybody who actually asks you to buy their products. I mean, buy the bank products or buy or invest in something lah. Anyone? No? Okay. Normally, it will be either a very smart guy dressed up like me, or a pretty girl lah. Yeah. In the past, of course, if you have heard my show, also, I mean, we do also a lot of private banking, priority banking, where after a while they will come and sell you something lah. Yeah, most of it is the funds like the unit trusts and those funds which the bank sells, right? Okay, and this is actually quite common lah. And of course, this is one way for people to actually invest their funds or invest their money or grow their wealth. Yeah, I'm not against this, but I just wanted to actually share with you some of the things that you need to actually be aware how these things work and how the performance are actually measured. Okay, and one very common things, right, which the fund managers or the funds that works is they have this thing called benchmark. You know this benchmark, right? And basically the returns, a lot of times the returns which they are actually generating for all these type of funds, right, they always have a KPI a KPI, and this KPI very often is actually benchmarked against an index. For example, if they are actually investing in Malaysia, yeah, this is Malaysia, right? Okay, they will say, okay, we benchmark the returns to KLCI, die. If you hear from fund managers, the product, they say our returns is actually going to be benchmarked against KLCI index. Run far, run away. Because KLCI index, right, is negative. This is actually the 1 year year to date KLCI index performance is actually 5.5. Yeah. Then this is another index this is a Sharia index because some of the products are also Sharia compliant. We also have a Sharia index in Bursa, right? And again, the index is actually negative, and this is another mid cap negative again. This is small cap index positive 3.3. Yeah. So benchmark against KLCI, Bursa, run far away. Don't take the product because you're going to, if they perform what this benchmark is this. Let's say if both this KLCI performs negative 5.5%, right? If the fund performs by negative 1%, then they say that they have outperformed the market. Outperform the market by generating negative 1% return. Is that good? To them, it's good because they are better than market. What they are saying is the market lost 5.5%. We only lost 1%. So we are better than the market. So you are lucky you have bought our fund. Otherwise, you put your money in the market yourself, right? You would have actually lost 5.5%. So that is what it is. Of course, then the other things is there are also foreign funds and all these kind of things. Again, they do all this benchmarking. Like this is actually to Dow Jones. Year to date is actually 15.1% return. And of course, if they have products which are actually invested in the US, for example, if they say that their fund is performing, say, at 20%, yeah, year to date 20%, the market is only doing at 15.1%, then again, they say that they are outperforming the market. Yeah, so these are the other markets. So if you look here, I mean, it's quite sad to see that this side is actually red year to date, when all the other markets except China, which is red. The US is actually much very bullish 15.1%. Taiwan this year is actually doing much better because last year they did very bad. Yeah, and of course even Singapore is doing 9.9%. We can do much better. Yeah, and of course Hong Kong, because it's also associated to China, right, it's actually doing negative 6.4%. And again, except Malaysia most of the other market if you look at when they have a negative in 1 year, the following year they will actually become very positive one. Like Taiwan last year they did bad, right? This year they do very good. Yeah, except why I say except Malaysia, then you see why in the next one. Okay, just now there was 1 year to date, right? This year, right? 3 year negative 14.2. That means 3 years length negative 14.2. Year to date still negative 5. Cannot recover. Okay, whereas you see the other markets is all blue, is it? It's all blue, is it? Yeah. And then 5 year still negative. So again, if you have actually put money in Malaysian stocks, I mean, if you just buy lah, I mean the index, or you just put in the top companies lah, highly likely the performance can actually mirror the index lah. Yeah. And of course it's not too great. That's why if you are actually investing, I mean, please need to actually consider to see which are the markets you need to actually put the money lah. Of course, all the while since the many years, 7 to 8 years, US has been the most bullish, and actually still very bullish. And it's never too late for you to actually work on going into the US market. Yeah. You see, even the past 5 years, Singapore is doing at 9.4%, and we are still a negative 6.9 in Malaysia. 10 year, okay, 10 year we are positive. But for 10 year, if you're positive 10.9%, you average out, how much are you making a year? Worse than fixed deposit. So basically, I'm telling you, don't bother to invest in stocks here. Correct enough? Yeah. Whereas if you look at the Dow Jones and all, it's actually much higher lah. I mean, I don't have the numbers here for S&P 500 lah. Of course, S&P 500 may perform better than this, because as I know, S&P 500 for the past 10 years, basically the average return is about 10% a year. Yeah. So this is actually the benchmark which I actually want to talk to you about. The funds normally would benchmark their returns to market returns, yeah, to actually see how good they perform lah. Yeah. And if they benchmark certain markets which I showed you here, then you need to be a bit careful lah, because at the end of the day, when you question them, right, hey, how come I put my money here for 10 years, it never grow? Then they'll say that no, we grow we did for 10 years, maybe their return is 12%. And if you look at the KLCI 10 years benchmark, the 10 years return is only 10.9%. So we are doing 12%, we are better than them by 1 or 2%. Yeah. Okay. Then the other thing I actually want to show you guys is actually about the most of the fund managers lah. This is actually their results, you see. And this is actually information coming out from S&P lah, Standard and Poor. This is actually the 10-year results about their funds. Okay, they are saying 82.51% of the funds underperform the market. I mean, just like what I've told you just now, right? The fund manager benchmark to the market to see how they perform, whether better or worse. And this is actually the results that for the past 10 years, 82% of the large funds, this is actually in the US, underperform the market. Meaning, what does this mean? What it means is that if you give your money to the fund managers to manage for the past 10 years, 82% of the time or chances you would have underperformed the market. That means what is the consequence? That means if you yourself put money buying the index in S&P, the S&P index, that means you go to the stock market, you trade yourself, you buy the index yourself, you will outperform the fund manager. So what it's saying is that indirectly, don't waste time with the fund managers, because 82% of the time they will be doing worse than the market. This was data for 10 years. Data for 5 years, 72% of the funds underperform the market. Yeah. And data for this is 5 years again. Sorry. Maybe I pasted the wrong year. But I think the latest one, even the 1 year one, is also about 50 or 60 over percent. Let me just check the website. S&P. It's never mind. I mean, I think it's about 60% now. Okay, then the other thing I actually want to share with you guys is this. Okay, this is actually a snapshot which I actually took from the Star newspaper. The Star, I see the Star graphics. Okay, this is actually talking about our own fund, Employees Provident Fund. And these are the statistics which I don't know if you have actually saw this. I'm just sharing this with you. This is actually talking about members. Total members which we have is actually 15.1 million. Okay, and then active members means members which are actually contributing is 7.6 million as at 2020 August. August, no, this is August 21. That means very current. And of course, these are the employers, how many employers and how many active employees, total employers contributing. That means 468,000 contributing. Where did the rest go? The difference between 549 registered employers and the one which are actively contributing. Close shop already. So about 80,000 80,000 employers close shop. Yeah, close shop already. This is 2020 data 2020 data okay. And then what the financials how much assets is actually held by EPF is 988 billion. Wow, that's a lot of money. You think that's a lot of money? I mean, to me, of course, it's a lot lah. But if you're talking about this 15.1 million people, members, money, then you can divide how much each person can get lah. Just like a Squid Game, the pot is 45.6 billion for 456 players. Yeah, and this pot is shared by 15.1 million. So each person, how much? Let me count. Very interesting. 988 billion means I put another 30 divided by 15.1. What? Cannot be 65 million, right? Okay, my mathematics very bad 988 billion. 1 billion is how many million? 1,000 million, right? So 988 times by 1,000 equals to 988 million. Wow. Divided by 15. Cannot be 65 million one person, right? No, I mean, of course, EPF over the years, they would have actually made profits, invested and all. Then this might be the excess. Okay, so again, the dividend which they have actually paid last year is 47 billion, and that was actually 5.2%, 5.2%. Yeah, and the Sharia, if you actually opted for Sharia, that was actually even lower at 4.9%. Okay, and of course, where do EPF invest all their money? Of course, a big part of it is also in Malaysian companies. Okay, in Malaysian companies. Okay, all right, and of course, they also move a lot to overseas. Some also included China. China this year not so good. Okay, what I actually wanted to share with you is this. The contribution which was actually made up 9.3%. Total contributions. This is their data. I'm just dissecting this. I'm not adding anything. Is 53.9 billion. That means total contributions. That means if you contribute EPF, if you add up all these 7.6 million people who contribute, is 53.9 billion. And this is the number which scared me lah. Okay, because you see, when the pandemic came, right, the government actually allowed people to withdraw money from EPF. Yeah, under various schemes, and of course, since last year up till now, 99.5 billion withdrawals. This can be a mix of people who retired and also people who withdraw their money to buy house or under the schemes which the government allowed, or people who just wanted to take money out because the returns are too low. Yeah. So 99.5 billion taken out last year, which if I compare with this 988 billion, it's actually about 10%, is it? So what it means is the withdrawals up to August is almost coming to 10% of the fund, is it? I mean, to me, I think that's actually a lot which happened within this 8 months. If this was from January to now, I think it's 8 months. Yeah, 168% up compared to the previous year or what. I don't know this. Comparing, yeah, they're comparing to the previous year. Yeah, August, is it? August to August, 168% up. At the rate, if this continue, another 12 months next year, you see this data. If another 99 billion goes out, you see, it is going to go down by 20%. You see, so it's very scary for me. This is my retirement money, yeah, and also yours, you see, because you see, the contribution was used to pay dividends, 47 out. So in terms of money in from contributors, give back to contributors, 47 billion. Yeah, some little left lah. On top of that, withdrawals is excluding dividends. So withdrawals 99 billion. So if you add this and this, it is close to 15% already. So this is 10 plus the dividend 5 is 15%. Yeah, maybe before the withdrawal, this was 100 and plus another 100 million, 180 billion. Yeah, but again, that is about 10%, which is quite a lot. So of course, for me, getting a return of 5.2% a year for my retirement is actually very little. And I think a lot of other people can do better. And if you have opportunity to actually do better, I mean, for me, this is my personal action. Take out the money. I took out my money. Yeah, I took out the money, and did it, and invested myself and invest and actually use the money to generate more returns . Okay, so what I wanted to share with you here is actually to take charge . And if you are given the opportunity by the government to take money out from EPF, which give a 5.2% return, and if you have any good opportunities or good returns, whether it is funds, don't benchmark for Malaysian one . If they do other funds in the US or whatever, or possibly they can actually do better than 5.2%. Yeah, then you can actually take out and structure your own fund. That means you manage it yourself. Yeah, manage it yourself if you can. If you can't, get a professional, but be careful on what type of fund you choose. Yeah, and then the other thing is, of course, you need to actually identify underperformance . This is for me one underperformer, because the return is generating for my money is only 5.2%. And of course, you may have some other funds which you invest is also underperforming. If you're getting anything less than, I would say, if anything less than 6 to 10% would be an underperformer. 6% is still okay, because it depends on your risk appetite. Of course, if you are older, closer to your retirement age, 6% would be something safe. Yeah, something safe, probably in REITs or safe investments lah. Of course, for the younger ones, which have not gone above 50 lah, like myself, you need to actually take a bit more higher returns investments, because you still have a lot of time to actually compound your wealth. Yeah, so you need to get a higher return, so that when you go old, right, you start to actually slowly reduce your return to safe investments. Yeah, so for me, the funds, let's say if I'm investing in funds, right, I would actually go on full equity fund. This is for myself. It's not financial advice. I'm not a qualified financial advisor. For myself, I would actually go on a full equity, highest risk. I mean, highest risk does not mean it is actually risky lah. It is basically what type of instrument they invest in. For example, if they are doing stocks and all, then of course the risk is very high. If they are doing bonds, then of course the risk is low. If they are doing cash markets, if the risk is actually even lower. Yeah. So for yourself, you have to actually identify the underperformance compared to your age. Yeah. If you are 20, 30 or below 50, I would say you need to get higher returns. And then, of course, the other thing is idle cash. Don't put your money idle, I would say. If you have, say, 10,000 or 20,000 or even 100,000, don't put it in the bank, earn 1% or 2%. Yeah, because easily you can actually find instruments in the market to give you 4% to 6% returns in the minimum. Just take a read lah. I mean, just look for some REITs in the market. There are actually some very good REITs in the market. Malaysia got lah, fine lah. Got some lah. I mean, I also got some. Long term is okay. Singapore also, they have a lot of REITs. In fact, Singapore REITs are even much more to choose from as compared to Malaysia. Yeah, I think all the REITs data and the REITs return you can actually check from the REIT fund table, which is publicly available. I will try to find, if I can find it, I can actually post it here. You can actually see later. Okay, so don't keep idle cash. Any money you have needs to generate return. Yeah, don't take some action on it. And of course, the other thing, if you can invest time and not a lot of time, 1 hour a month will do. Learn how to invest yourself. Learn how to invest. Learn how you can actually use the market instruments to actually generate income yourself. Okay, because if you do it yourself, you are only going to pay brokerage, correct or not? And the brokerage is not going to be very expensive. If you actually let the fund manager do it, before they give you the returns, they would have already deducted their fat salary. They have deducted all their infrastructure, their sales commission, and all these kind of things. They would have actually deducted a lot before they give you the returns. So, if you can learn and do it yourself, because 80% of the fund manager underperform the market. Yeah, you just buy the market, you can already perform 80% better than them already. Just buy the market. Yeah, but don't buy the wrong market lah. Look at all this market. Where is it? Look at all this market. Choose the good ones. Okay, this is another scale. Okay, so this is actually what I actually want to show you also. And this is actually when I noticed this, I noticed it some years ago lah. Of course, I took the opportunity to take funds out. There are various ways for you to take funds out of EPF. buy house is one. The current incentive which the government give you to withdraw monthly, I don't know how much, maybe a few $100s a month is another option. If you have funds above, I think it's above $1 million inside there, you can also withdraw it up to a maximum of anything above 1 million. You can actually also take it out lah. Yeah. So there are various ways. Look for opportunities. If you don't want them to manage your funds, if you can do it better, do it yourself lah. Okay, this is what I did. I actually started this fund myself last year. And this is the performance of the fund this year up to 15 October, I think. 23.4% return. 23.4% return. And this was since day one, I actually started the fund, 57.1% return. Okay, it's not a matter of the percentage lah. I'm just showing you, if you do the right way to manage your funds, right, with the right instruments, right, you can actually perform much better than all these people here. Yeah. Then why don't you do it? And I said that it only takes about 1 hour of your time, right? 1 hour of your time to actually do this. For me to actually do this, I only take 1 hour. This fund, I only take about 1 hour a month to actually do this lah. Yeah. So why don't you do it? 57% return leh. Imagine if I were to continue to put my funds with these people here, yeah, I would only got 4 to 5% return a year. 4 to 5%. And for the same amount of money, if I manage it myself, right, I'm actually getting 10 times in a year plus. 10 times. Can you imagine how well you can actually do if you invest time to actually do this? Yeah, that's the outcome. You can do much better. Yeah. So again, identify underperformance. If you have negative or low returns in any of the investments, yeah, please do something about it. Yeah. And then you can actually outperform the market and convert those negative to actually 20% returns a year with certain instruments. Yeah. And of course, the other effect is that this is actually cumulative and compounding. Yeah. Imagine you outperform the people you entrusted your money with before this by 10 times a year. Say in 2 years, say 5 times in every year lah. Yeah, correct or not? My mathematics very bad one. Correct lah. 25 5 times lah. 25 divided by 5 is 5 ma. Yeah. So you outperform 5 times in 1 year. In 10 years, you multiply that 5. You outperform it by many times. You see how big your retirement savings will actually go in the next 10 years. Will be a huge difference. That's why when I start to actually this talk, right, the thing is that it is going to cost you millions. Really, it's literally going to cost you millions if you actually put your money at the wrong places and you don't manage it actively. Yeah. And nowadays it's not difficult to manage your money actively yourself. Yeah. If you do not know how, look for me. Okay. Yeah, we do trainings on actually how to actually manage your personal finance and personal wealth. We do education and in these areas lah. Yeah. We don't manage money for people lah, but of course we teach you how to manage your own money. Yeah. All right. So how many of you find this interesting and something which you probably have not known lah. Yeah. If you have not known this, look at this seriously, because the action we should take after today's talk, right, will actually make a huge difference in your retirement. Yeah. let me put here. Yeah, if you want to know more how to actually do this, I can actually show you how. We do some trainings. Oh, this is my YouTube. We do some trainings in terms of how to uh, generate wealth, like generate wealth, and how to actually use certain instruments to actually compound your wealth. Yeah, and all this is actually covered in the event here. You can actually take this. Let me put this. You can actually take this and by all means check it out. Okay, so again, another interesting topic covered, and then I hope to actually bring you more contents in the future, and I will see you next week, same time on Traders Talk. For those who have actually joined, thank you so much for coming, and if you like this event, please share with your friends. Yeah. Okay, so until then, please remember to train, trade, and thrive. Yeah. So this is Meng Hon signing off from Traders Talk. Bye bye.